watching famous Dave on YouTube.
All right, welcome back. So, if you followed our episode yesterday, then you would know that my position coming into yesterday in GameStop was that I needed it to stay above 131. And that certainly didn't happen. But fortunately, I bailed out of my position yesterday right after the open. So, what I talked about with my position right before the open was not actually what ended up being my position. And just to refresh your memory, GameStop took off after earnings and went from 75 all the way up to 200. You can see here on a chart, earnings was right around 314, and then they missed earnings, but the stock still doubled in value after the CEO came out and said that he bought 100,000 shares, or it became known that he bought 100,000 shares. Then it ripped to 200, but since then it's been kind of giving back. Coming into today, you might, if you've been following the futures coming into today, you might notice that we're kind of off the highs. If we look at the E-minis here, we're showing currently up 16. We were up a little more than that before. So here's a chart of the E-minis. So you can see we got up to 4,215 around 7 o'clock. The high was around 5 o'clock, 4,217. And we've given back probably like most of that gain, right? We are down, 25 points since then, which is a pretty significant amount in the E-minis. And it looks like, we may struggle to stay above water here as showing up only 16 right now. If we look at NASDAQ futures currently up 23, kind of the same story. These tend to kind of follow each other. What we could do, just to look at this real quick, is we could go to the chart and then we could overlay. So I'm going to stay on this one. We could overlay the NASDAQ chart and the E-mini chart and see what we see here. So if I go to studies, add study, compare with, and we go to compare with, I'm going to go custom symbol. I saw NASDAQ on there, but I think that's the NASDAQ index, which isn't open yet. We need NASDAQ futures. So let's see if we can compare with, we already have NASDAQ futures. We're looking for E-mini futures here. So if you look, the pink being E-minis, look, they're just, they're correlating with each other, right? You can see that pretty well, which is pretty normal. All right, let's remove the study. So if we look at a chart of GameStop, we can see that it's been trending lower as of late. Now, most of the people, if you came here from StockTwits chat, then you are probably long this, because most people, it seems online, are long this and don't want to hear anything about anyone being shorted and think it's like, I don't know, un-American to be short or FUD and all these words that are associated with crypto that they use to kind of pump being long this. Now, I'm a trader that started before all of that stuff, and thus I have a different view of things. But regardless of your view of this, I just want to show you the position here. So the first position I had was I was long the 150.47 put spread. So if we go back 180 days, that's probably too much, but when this was trading around 150, I bought the 150.47 put spread. I paid about half of its potential value. So I paid 153. It could be worth $3, and that worked out. The stock went down. I ended up selling that yesterday for around 270, and I bought a lower put spread. I bought the May 120 put spread and paid about a third of that one's value. So the 125 put spread could be worth 5 points. Excuse me. So half of that would be 250. I paid 220 for it. So looking to capitalize if this moves lower. And if we pull up my position here on the chart and I get out of the way, you can actually see that I have a relatively small position. I bought 14 of these spreads, the 125, 120 spread. Sorry, I didn't get out of the way here. 125, 120 spread. You can see it on the bottom of the chart here. Or if we were to look on the options chart, we go out to May. It's right here. I'm long the 25 puts and I'm short the 20 puts, right? So I bought this with stock around 131 yesterday, and so far it worked, right? Stock moved lower since then. Now, stock has bid up a little bit before the open here. You can see it's 128.11 bid. It was 129 bid before, so it's come back down along with the futures coming back down, and that sort of makes sense, right? Generally, if nothing else is going on, this stock sort of does what the futures are doing. And part of that is because this is in several ETFs or other financial products where if the future goes down, then they need to sell a little bit of this. Or whichever product it's in, if it goes down, they need to sell a little bit of this. So as the futures move lower, this moves a little bit lower and vice versa. Now, if we look at the chart of this, it's definitely made some progress to the downside in the last few sessions. If we go to a 10-day chart, you can see just... Now, this doesn't mean that this couldn't just move right back up tomorrow, right? We've seen that before in this issue. If we go out a little bit further here, let's 20-day. You can see this day here, boom, it went up 40 points, right? So we could easily go up 40 points again. Nobody knows exactly what's going to happen, and nor do I. But the play here for me is to continue with the trend here and that we move lower. Now I was calculating this out here. There's 23 days till expiration. And if we pull up the Analyze tab, now I'm long the 25-20 put spread. So that means that I need this to be 120 or below on expiration. So if we just play around with the chart here, you can see it would need to be down 7% in the next 20 days for this to work out. Now, it was down, I think, 11% just yesterday. So it wouldn't take much for this to get there. But the question is, how do we adjust this position? So if it does move lower, I'm looking to kind of try to lock something in. So looking to either, remember we paid $2.20 for this spread here, the 125, 120. And it looks like they've added each dollar strike here, which it's a little bit annoying to me when they add dollar strikes because it doesn't seem necessary to me. But regardless, as this moves lower, I would look to sell something against it. And, my concern here is that my concern is I don't want to give up my profitability. So if all works out with this position, right, let's say it was 10 spreads. 10 times 5, it would be a $5,000 winner, right? If it was 15, it would be $7,500 winner, right? So 14 would be 7,500 minus 500, right? So $7,000 winner if everything worked out for this. Now, if the stuff moves lower, we want to sell something against it. Well, if we were able to sell the 120, 115 put spread at the same price that we bought this one for, then we would have the butterfly on for even. That means we have a free shot. That means we've taken all our money out of the system and we have a free shot at stuff. If we end between 125 and 115, we're a winner. But I don't necessarily want to do that because what happens if we just continue to move lower? Then selling this 2015 put spread could be just giving up our profitability ultimately. So I want to try to pick something that's far enough away that we won't get there by the time 23 days go by, but not so far away that we don't really collect too much money. So for example, if I were to sell the 85 80 put spread against my position here, right? So I'm going to click on selling the 85 put and then buying the 80 put. All right, if I were to sell that put spread, I would only get 38 cents, right? For the spread could be worth up to $5, and I'm only selling it for 38 cents. So that doesn't seem like a good use of the buying power, right? Like this could blow up in my face potentially, only to make 38 cents, right? Let's look at something else. Like let's look at maybe the 195. So the 195, 83 cents. It's still less than 1/5 of what it could be worth. I want something that's worth like something more. So let's look at the 105, 100. All right, so this is 105. Now, what if we were to put an offer in here of, let's say, $2? Then if it got down around $2, if we sold 14 of these, so we'd be taking $3,000 off the table. So taking most of the money off the table, and you do have a good range here from 105 up to 120. We're a total winner, and we collect not only the $7,000 from the upside, but another. If we sold this for 2, or at 2, then it would be 2 times 15 is 30 minus 500 again. Right, so 2,500. So it would be 7,000 plus 2,500. So we would ultimately make 9,500 in the trade if we closed in 23 days between 105 and 120. So now, last time we did a trade like this, I bought a put spread, and everything I tried to sell to the downside, we just blew right through. So I'm kind of a little skittish about selling downside because I don't want to give up. You know, if we can make $7,000 on this initial trade, I'd be perfectly happy with that. I don't necessarily want to give up more by selling stuff down below, but the reason to sell something down here is what happens if it goes all the way down to, let's say, 115. I do nothing, and then it just goes right back to 130 again. Then I'm a complete loser. Whereas if I'd sold something down here, done something to kind of lock in a little bit of the win for it moving down, then if we went back up again, I could scalp back out. So it's a tough call, but my feeling is if you do get a move down by like 5, 6, 10 points, you want to do something against it to kind of lock in some bit of that profitability. Now, one thing you could do is you could just sell out this 125, 120 put spread. And generally in options trading, we say the best thing to do against a position is to sell out that actual position, right? Another thing to do if we have buying power would be to actually buy some stock against this position. So, for example, it's showing that currently the delta is short 89. So each dollar this goes down, we would make around $89. So we could buy something like, if we move down $10 from here, we could do something like buy 50 shares against this to kind of hedge ourselves a little bit. That way, if it went back up, we'd make money on the stock. And if it went back down, we'd make money on the options here. Now, it really depends on kind of your outlook. And my outlook is that I wouldn't be surprised if this goes back down through 100 again. So I'm not that aggressive. I'm more aggressive to being short it than long it, and thus I'm cautious about selling downside here. All right, well, that's enough with GameStop for today. So currently, short 89 deltas via the 125, 120 put spread out 21 days from now. Let's move on to UVXY and the VIX. Now, the VIX, pretty big spike yesterday. We're off it a little bit. VIX currently down a 0.63, but still very elevated. Let's take a look at the term structure today. And really, the market has not been looking good, right? That's pretty obvious. And we can see currently we are completely inverted. So yesterday we had, we were a little bit back into contango. It was kind of righting itself. But now we are just in total kind of panic mode with being inverted and in backwardation, right? By backwardation, I mean that the futures are facing downward here. By inverted, I mean that the VIX spot is above all of the futures right now. So we are currently in a scary spike situation, right? Even though we've come off the highs, it's going to take the market rallying a little bit for the situation to kind of align itself. Now, let's take a look at UVXY and think about some ideas here. Now, UVXY has spiked way up to 24 here, right? And that certainly provides an opportunity. Now, this hasn't been a great few days for people who are short this coming in, but if you don't have a position right now, this kind of creates an opportunity, right? Now, I'm looking at UVIX right now, which is the new product. Let's go to UVXY first. And UVXY looking very similar to UVIX. Remember, UVXY 1.5 times leverage, UVIX 2 times leverage. And both of these, there's an opportunity to buy put spreads here, but you want to be very careful with the pricing of it. You don't just want to buy anything. You want to figure out the pricing, because some of this stuff is just, it's set up because they know people want to buy this stuff. So they're gonna it's set up so that you kind of overpay for it. So we have to be very strategic with what we buy. So, and my ideas recently with this has been to buy kind of closer weak stuff. It's risky, but it has big rewards if it works out. So, for example, 16 days to go, we could look back at something like the 13 put, something that's pretty far out of the money now, but not that crazy to think that we come back down in the next few days, right? It only took 2 days to go up. Usually these events don't last very long. Now, this one has lasted longer than usual already, in that it's a multi-day cycle. It's already been 3 sessions. However, all it takes is 1 day of rally, and this can go all the way back to 14, if not lower. So the safest way is to look at put spreads. So I would be looking at something like the 15-13 put spread 2 weeks out. Let's see. So this spread could be worth $2. We're paying 81 cents. Then you can more than double your money if we go back to 13. That's a little bit of an if, but in 16 days, that seems to give a decent amount of time. Now, I would consider this a medium risk trade to buy the 15-13 put spread. Another thing to maybe consider would be to buy the 13 calendar. So buy the 13 put here and sell the 13 put 9 days out, or even like the 12 put 9 days out. This way, you could get some positive decay going. So what if we were to buy the 13 May 13 put and sell the 6 May 12 put? Let's model that for a second. Trades like this I like, in that you can collect decay while also making a bet to the downside, or at least you can finance your position somewhat. However, when you're buying a calendar like this, remember, if it goes through the strike too much, you're going to get hurt to the downside even. So you want to pick something that's low enough. And in this case, I'm buying a higher strike and selling a lower one, so it's not it's a diagonal, it's not a calendar. But if you're trading calendars, you want to be careful that you pick a low enough strike. But let's take a look at this diagonal. If we were to put this on, let's say 50 times. So 50 times would be around $2,500, let's say. Let's create duplicate order. Let's take a look at this. So this would be $2,365 to put on. It would get us short 400 deltas. It is still costing 47 a day, but that's much less than if we just bought the put straight out. The other thing you could do is buy the May 13 put straight out and look for a little bit of a down move and then sell something against it once it's moved down a little bit. But that is a little bit more risky. So let's take a look at it if we were to do that for a second. So let's go over to our screen here and look at the May. Let's look at the 13 puts here. So if we were to buy 40 of these puts, I'm trying to kind of use the same amount of money. If we had, let's say we had $2,500 here. So if we were to buy 35 puts. That would be $2,300, around the same amount of money you're putting out as the other trade. Analyze trade. Okay, so this is going to short a few more deltas, but look, it's 3 to 4 times as much decay per day. However, you make more money as it moves lower, which makes sense. But you're looking to sell something against this, and as soon as you sell something against this, the decay disappears or lessens, and so does the money that you have at risk. And you wouldn't probably be waiting days and days to put on the other side of this trade. It would probably be kind of a quick thing that you were doing. So that's a couple ways to look at ideas here. UVIX, similar. Let's take a look quickly at UVIX volume here. I'm interested to see how much volume we've actually had on the options since this just started trading. And there's something going on here. It's slowly building up. The markets are going to be wider than UVXY though, so I would probably stick to UVXY until we get just a little more volume in here. It's going to be harder to get stuff done in here. Yes, it's more bang for the buck, but the spreads are wider right now, so I would kind of stick to UVXY or even VXX until this volume builds a little more in this particular issue. Anyway, so that's going to wrap it up for today. I don't want to go on forever and ever with you, but thanks for checking out this stream, and I appreciate everybody's support, and we'll see you in the next video. Best of luck for you for your trading today, and thanks for watching. Bye-bye now.